Cox and King's September quarter profits jumped fivefold to be reported at 167 crore rupees, with margins expanding to 21.8%. What have been the key factors at play here? To answer this and to discuss the road ahead for the company, joining us on the show is the Group CFO, Peter Kerkar. Our colleague, Saloni Dhanuka, who tracks the counter closely, also joining in. Saloni, over to you.
Thanks for that, Pradeep. Good afternoon, Mr. Peter. My first question to you is, though revenues came in a bit weak this quarter, your margins have expanded almost 3 times in this quarter as compared to the same quarter last year. So what has led the margin expansion, sir?
So I think that with the new GST law, the revenues are now reported differently. So rather than taking your gross revenues as a travel agency, we're taking some of our revenues as net revenues as per the new GST ruling, which is why the revenues have come down in terms of the reporting. But in terms of the actual gross operating margin, you'll see that we've gone quite substantially higher. So this is more a question of reporting than the actual revenues having come down. And if you look at the net revenue growth, it's been at around 12% from 597 to 668 crores.
And sir, what about the margins? It has jumped by almost threefold.
Basically, our margin expansion has been because the growth in the actual total volumes out of India has been good. Also, we've had a slightly favorable exchange rate, which has helped. And the Indian rupee against the pound, for example, is still stronger than it was last year. So those two factors have helped. So it's growth combined with a positive exchange gain.
Also, sir, was there any foreign exchange gains or losses in the margins? If yes, can you give us some numbers on margins excluding your foreign exchange variations?
The EBITDA growth excluding foreign exchange gains went from the last quarter, which was 188 crores, to 348 crores. So it was an 85% increase excluding any foreign exchange gains. And that was, 85% increase year on year.
Sir, speaking about your core business, Indian and international leisure is doing pretty well and it has grown in double digit, but your education business seems to have taken a hit. So what is the reason for that?
The primary hit is that 90% of our education revenues are in pounds, and as you know, compared to last year, so the actual growth was around 5% in pound terms. But if you take it in rupee terms, we are now approximately, it went from 105 rupees to 85 rupees. And this is why it's showing a decline. So the real steady state currency has been an increase. However, because of the Indian rupee hit, that's why we have seen a decline in rupee terms. So there has been growth in the business, which is, pretty good since the entire business is actually overseas.
Also, sir, net revenue from Meininger business has grown almost 50% on a sequential basis. What has led the growth, and do you see some traction going ahead?
We do, because Meininger, this was all predicted. We've grown the business since we've owned it from 3,500 beds to the current 8,500 beds. And we've committed that this will double to 15,000 beds by the fiscal 2020. And these are all planned projects which are currently being constructed or run out. So, this growth should continue to be aggressive. And we don't see any real execution risk because we intend to literally double the number of beds in the next 2.5 years. And we're completely on track in terms of that delivery. So this was a very planned growth, and it's a very aggressive growth, and we are very happy with the growth that Meininger has shown.
And lastly, sir, if you could give us some guidance in terms of how the Indian as well as international business is panning out for the company in the current fiscal, adjusted for foreign exchange gains and also adjusted for GST for that matter, sir.
So we've continually maintained that our target for the year is, suppose the India growth on the outbound story, which is our primary business, is 8%. We would like to at least double that as our target. So between 15 and 16% growth for the India business is what we target year in, year out. And we've by and large for the last 17 years managed to get this in every consecutive year. But as a group, because we have various moving parts, including our foreign businesses, which are in quite evolved economies, we say as a group we should grow between 8 and 10% on the top line. And a similar EBITDA growth is what we budget for, for the year. So obviously India will be disproportionately higher. Meininger obviously will be disproportionately higher because we're putting on so much bed stock. But our traditional leisure business and our education business we see as lower growth opportunities simply because they are in evolved economies. So the blended basis, as I said, between 8 and 10% top line and a similar level for our EBITDAs going forward.
All right, sir. Thank you so much for your time. It was pleasure speaking to you. So that was the management of Cox & Kings, quite confident about growing their Indian leisure business in double digit in next year.